The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 14th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let your fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, just about any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, something must be wrong with my screens. There's a lot of red out there. The Dow is off 12 points. The S&P is down 2. The Russell's off 5 points. New York Stock Exchange is down 24. You got the NASDAQ 100 up 13. The NASDAQ Composite up 6. Gold is trading out 12.56. We'll take a look at that. Light sweet crude at 56.85. Leading the charge here to the upside, it is Teva Pharmaceuticals up 31.60 or $10. Nordson Corp up $22, 17%. Priceline up 20. Google's up 13 to the downside. Sanderson Farms off $21 or 12%. Cryteo SA down 26% or $8. Intuitive Surgical down 7. And AutoZone down 7 as well. Let's go to our first questions. We got a couple questions that have come in. Don is in Tampa area. He wants to take a look at AU. So let's go take a look at AU. I think that is a gold equity. Anglo Ashanti, maybe? I could be wrong. It would not be the first time today. So let's go take a look at AU and see what it's doing. Yeah, there's Anglo Gold Ashanti. How about that? So Don is wondering, is this a good buy with it being down towards the bottom of the consolidation? If we take a look at this chart right here, the weekly chart here for this specific equity, you can see that it's pretty much been. Here's the consolidation that. Let me just go ahead and visually put it out here. Whoops, what did I do there? Why did I turn something off? That was not a good idea. Give me a moment here. Sorry, I don't know what the heck I just did there. Not a good idea to hit buttons that you don't know what they do. But here is the consolidation area. We'll just go ahead and use kind of like a yellow rectangle out here. And so Don's taking a look at this, saying, hey, it's down towards the bottom of the consolidation, which is true. Is now a good time to go ahead and step into this equity if, in fact, gold is turning. And what he'd be looking at is move up to about 1079, 918 to 1079 out here. Now, that's the weekly chart. Let's go take a look at the daily chart out here and see what this equity actually did yesterday, what it's doing today. So it had that nice move yesterday, just as all the gold equities did, certainly after the 2 o'clock time frame. And the interesting thing about this equity, Don, is, yeah, you've got the bottom of the consolidation pegged. What this has done today, though, let's go take a look at it. August 25th is a swing point low with 2.9 million shares. And in essence, you've tested it with more volume, 3 million shares already. Last time, or the prior time down here was 4.3 million on August 4th. We're doing more volume than that. So this equity specifically, yes, it's got that consolidation, but it should have been, in essence, testing these lows with lighter volume, not with volume out here. And then you have to ask yourself with yesterday's move, and I don't know the answer to this, Don, but many of the other mining equities didn't open all the way back down at the lows of yesterday. So what is it that's going on with Anglo Gold Ashanti? And so I would just say, yes, it is at the bottom of the consolidation. If you feel that warrants going ahead and buying it, go ahead and do so. If you just take a look at just the GDX, just the larger basket of which Anglo is a part of, here you can see where the GDX, or the basket of stocks, certainly opened up just a tad lower, but not all the way down at yesterday's low. So I would just have to say, something to think about. And what that tells me, Don, that tells me there are better equities for you to find if you're going to try to own an individual equity inside of that complex out there. So that's what my eye sees, and that's the question that I would pose for you as well. You can see the consolidation inside of the GDX as well. Seems to me like the GDX is behaving better than Anglo Ashanti from an individual standpoint. We had other questions come in from John in Sarasota. John wanted to take a look at a number of different equities out here. ETSY is one of them. I think that's Etsy. And if we take a look at it, John didn't indicate what it was you were looking for, but let's just take a look at the weekly chart out here, get a feel. Now, this is an IPO taking you back into the time frame of, April 2015. And from an A to B, we can now see this thing is making higher lows, higher highs as it tries to get back up into that IPO area. The swing point out here from a weekly perspective was October 10th, 6 million shares, and last week you cleared that was 17 million shares. So this looks like as you said, a good buy. If we take a look at some of the price projections on this here, just the old lightning bolt pattern, we're going to get the first A to B equals CD that was achieved yesterday. So it's on its way to level number 2, 22.14, maybe level number 3, 25.61 out there. So from a weekly perspective, looks good. Just because it completed a one-to-one does not mean that's all it's going to do out here. On a daily basis, there was a swing point with 965,000 shares. That was crossed with wow, how about that? That was really crossed with volume. You had 5 million shares on December the 4th and 4 million shares. So, yeah, this is looking pretty good. Let's go ahead and take a look at Etsy on Stevie's other charting platform, see what we can figure out here. See if there's anything that gives us pause. Today, and I do mean today. Do I mean today? Yeah, I mean today. So today's going to be one of these Tom DeMark 9 counts out here. If you're looking to buy this, it's a possibility that this equity would pull back, and your buy on here, because you asked for a good buy, I would say would be $19.17, and that is on ticker symbol ETSY. One of the other ones that John wanted to take a look at was Costco, I believe it is, or Cisco, CSCO. So let's go take a look at it. Let's look at the daily time frame. No, let's go look at a longer time frame out here. So if we look at Cisco, see what this thing is doing. Boy, this took out a B point here. 91 million shares was taken out with 153. So on a weekly basis, this has a confirmed A to B equals CD. And John, that price projection inside of Cisco is going to take it to a minimum of 42.50. I'd say 45.80 is more likely in play. Right now, we got the Dow off 20 points. We'll go back to the general markets when we come back from this break. Of course, I want to hear from you. Steve Rhodes with TFNN.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
9 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 11 TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 7. S&P is down a couple of points out here. And so I said, let's go look at the indices, a couple of things. And let's start by taking a look at perhaps the most interesting patterns that I am taking a look at. And that really goes back to the Dow. Now, the Dow's down 13 points, no big deal right now. But if we take a look at 4 different time frames out here, we're going to look at the 30, look at the 120, look at the 240, and then look at the daily. And we take a look at the 30-minute. Each of these time frames has formed a similar pattern. Similar pattern meaning price moving higher, doing a less relative energy. In the case of the 30-minute chart here for the Dow, this gave you a confirming signal right here. This is at the time of 5:30 this morning. You had a little key reversal session, bearish engulfing session. You're closed below Stevie's red line. And we've seen the things move to the downside. Now, what to anticipate over the next couple hours or so, what I'm anticipating, at least from a 30-minute perspective, is Stevie's red line, 24,645, and price to catch up to each other. So just because I'm going to show you these interesting patterns and you see the Dow get back into the green, it just means that what it is that I'm anticipating is actually unfolding out here. Now, the reason why I suggest that is because we've got this price oscillator condition right now at the 0 level, just slightly below 0. So we should see a, a meetup of, excuse me, Stevie's red line and price. I don't know when. I'm not that good. But I am good enough to know what the normal pattern is. Now, that's what's going on a 30-minute basis. If we just simply go up 4 times, sorry, it's going to be like this the rest of the show. I'll do what I can not to cough in your ear, but that's asking a whole lot. And if we take a look at the 2-hour chart here for the Dow, you'll see price again moving higher, doing less relative energy, little dark cloud cover, a little shooting star candle out here as was making that high. And so this suggests price should be pulling back. Now, that 30-minute chart actually has priority or should have priority over the coming hours, but you still have a move lower that's being forecasted by both of those charts. And if we take a look at the 240, here we can see, again, the same pattern. Price moving higher, doing less relative energy. Nice little shooting star we got below during this 2-hour time frame. We got below Stevie's red line. In this case here, targets are around 24,450. But I think the real targets are going to come more from the other other tools that we use out here to try to identify levels of support and resistance. Well, inside the actual daily chart, you're going to see, again, price moving higher, doing less relative energy. The real support level here is 24,507. Now, that number is going to change a bit, but any close below, we'll just call it 24,500 today. One, you're going to have a bearish reversal candle, and two, you're going to be below Stevie's red line, and that says then to anticipate more of a retracement, more of a pullback out here. But you've got to have all these conditions met in order for that to occur. So how are we going to figure out where it is that price is going to head to should these conditions continue to unfold like this? Well, we would just go take a look at those multiple time frames inside our system, where we can take a look at our task market profiles. We can see we're already below the bottom of a 30. We're below the bottom of a 60. Inside the 240, the level that we're looking at is 24,413. Well, that is lower than the daily equity futures contract. So 24,443 really becomes the target only, and I do say only, if there is a close below the 24,500 level. That's what you would anticipate. If price just gets down and tests Stevie's red line and bounces from there, no big deal. Just your natural, normal garden type variety retracement, as small as it might be. So to me, that's what I would be watching. If I take a look at the advanced decline oscillator reading inside the New York Stock Exchange, as of 122, it is down below zero. Well, if it stays down below zero, that's suggesting that there is a retracement that is underway. NASDAQ Composite has not been above zero for days out here, even though it's had a nice little run, nice little rally, counter trend rally. What we know is based upon using that tool, so really has been sellers in control of the NASDAQ Composite. Now, not the case with the Dow. The advanced decline oscillator reading is still above zero, so we're going to have to use these other tools that I just shared with you and showed you. Inside the S&P 500, really the only tool you and I are going to be, well, we can go look at the ES Mini, but the other tool that we would use from a cash indice standpoint is the level of 1049. That is the 50-day exponential moving average for the spot volatility index. So to me, those are the interesting things to pay attention to help identify what is likely to unfold excuse me, over the ensuing days out here. Now, something else that is important to many people out there is, hey, Steve-O, what's going on with gold? That's an excellent question. And I think the next 7 minutes are really important to answering that question. 7 minutes, you say? How can that be so important? Well, let's first start on our journey here. Well, not there. Let's start here. Let's remind ourselves that there is a direct directional correlation between the movement of the Japanese yen, bottom panel of our screen, and certainly the gold contract, top panel of our screen out here. It is so specific that and so direct that to ignore it, well, would be risky. And you and I are not going to be risky, so to speak. So we know that that direct correlation is out there. No denying that. When we take a look at the daily equity futures contract here for the yen, I'm going to get rid of this A to B equals CD pattern. You can see that price has rejected it's gotten above its red line level, 0.8871. Now, the price oscillator is still below zero. It says, hey, this could just be a counter trend rally to head up to its swing point out here. The swing point that we're taking a look at is in the 0.90 area out here. But if this is going to move to 0.90, I can assure you, as much as I can assure you of anything, gold is going to move higher. Gold equities are going to move higher. So, Don, that the AU should move higher as well, if in fact this is how things unfold. But this is the message to you and I right now, is that that's what wants to take place. Well, if that's going to take place, why did I say the next 7 minutes was so important out here? Well, it's one of those things where when we take a look at what gold has done overnight, since yesterday, really, since the exact time frame, when I say since, I'm talking about 11 o'clock in the morning. So since 11 o'clock in the morning on December the 12th. What's today, December the 14th? Yeah. So for the last 2 days. If we do our nice little wave counts out here, you're going to see that the actual top came in last night on a 30-minute basis for the gold contract, making that seventh wave move, making that little Stevie Wonder move. That's letter G on my system. That was the top. That was the top so far. What's taken place thus far is it has formed, the gold contract on a 30-minute chart, has formed a nice little Gartley buy pattern. It did that when it created this little bullish engulfing candle at 11 o'clock this morning. Interesting, 11 and 11. I think it's just a coincidence out there. But it seems like buyers seem to be waking up at 11 o'clock. So that is a confirmed Gartley buy. Now, if price in the next 3.5 minutes can close above 1257.40, it will have turned its price oscillator, which is above zero. It'll have turned it back up. Yes, price needs to close above 1259.20 as well, but right now it's just going to be can gold in the next 3 minutes close above Stevie's red line. If not, then it hasn't given you the next signal that gold is ready to move higher. And if it does, then it has. It's as simple as that. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up about 3 points. Imagine that. You and I, we looked at these charts and we said, okay, so what we should see here is we should see price start to move higher to catch up to Stevie's red line. So if you start to see the Dow go green, don't be surprised. Just anticipate that. So we'll watch to see how that pattern plays out here. It's just simply going to be Stevie's red line and price coming together over the coming, maybe it's the next half hour. I can't time it. I just know what is the what the high probability outcome is of what's going to take place. How that test is resolved, I just let the test do it and take care of itself, and then let us know what's going on. Inside gold, the reason why that 1258, 1259 level was also important was because of the daily time frame chart. And we take a look at the daily time frame chart. As nice of a move as yesterday was, it was nothing more thus far than a counter trend rally right into resistance. That's truly what it was. Now, that's truly what it was if you go ahead and use Stevie's tools. If you don't use my tools, then you come up with a different interpretation. But all price did yesterday was run right into Stevie's red line. You can see that if you're watching us here. Overnight, yes, price moved higher, made that seventh wave move on that 30-minute chart. But thus far, price is continuing to be deflected underneath Stevie's red line. That's never a good thing. Got some great patterns out here, but the pattern that you really need to see is turning that price oscillator, that bottom portion of the screen, up. Otherwise, it's just been a nice counter trend rally. Is that possible? Is that so, Steve-O? And why isn't gold really taking off? That's a great question out there. And to answer that question, it's because it's not just you and I that trade gold. How about everybody else in Europe? How about everybody else in Japan? And if we just take a look at this chart right here, it says there are troubles in River City. There's troubles in River City in Japan, that's for sure. How do we know that? Well, if we take a look at the top panel of our chart, and we take a look at just simple trend lines coming back to October of 2016, that's where you have a nice little trend line. You can see that gold priced in yen has broken through that trend line. Now, maybe it's going to try to get back, but at this stage here, I can assure you that yen traders are not that enthused about what it is they're seeing in gold. You wouldn't be enthused if you saw this in dollars break a trend line. Oh, that's right, it did. So it did break a trend line. So those traders that use trend lines out here are not that enthused with what gold has already done thus far. Right? It still broke through a trend line. It hasn't gotten back above it. That's the bottom panel of our screen out here. And those traders are saying, geez Louise out here, because price could go down to that next trend line, that bottom level out here. And let's face it, those folks that are over in Europe right now who are trading gold priced in euros, they're not enthused either, because gold broke through that trend line. So if you're wondering why isn't gold doing a whole lot, at this stage here, all that we've been able to identify is that gold has had nothing more than a counter-trend rally into resistance, and in some cases, it hasn't even tested resistance in other currencies out here. Doesn't mean that it hasn't bottomed, but it is a reason if you're wondering, hey, why isn't gold doing a whole lot? Some of you might be saying, maybe it's because of the U.S. dollar. Remember, the U.S. dollar is a basket of 6 currencies out there. So it's not just about, you can't just think in dollars. We know that we have to pay attention. The real trade here, the real carry trade is yen futures from a directional standpoint out there. Everybody that ignores that is ignoring the obvious out here. So that 1259 area is really important for gold to maybe pique the interest of traders elsewhere. And if we go take a look at the profiles for gold out here, market profiles, well, the good news is for you and me. The good news is that we've got a brand new daily profile. The top of that box is 1259.40. So now if we're really looking for the number that we want, that bulls want to see gold cross and stay above, is going to be that 1259.40 level. If that happens out there, then you're going to want to watch 1266.10. And if that occurs out here, then at least with regard to gold priced in dollars, you're out of the woods. And you're back into, I don't know, if you go out of the woods, then where do you go into? I guess you go to the beach, right? Once you get out of the woods, you got to go to the beach. So that's my take on the charts when we take a look at gold priced in other currencies, take a look at natural levels of support. We didn't talk about support. Support on gold, and where there might be a good buy, assuming that it can't break through resistance, is going to be 1242. The bottom of its daily box, which is a nice structured bullish box out here. If we take a look at it, we'll just simply turn off price, right? So we'll turn off, that's going to be your second panel from the right-hand side. So as we turn off price, you'll see this brand new profile. You'll see that the center, 1246.70, much closer to 1242.50, the bottom, and therefore 1259.40 is the level that price needs to clear out here. The 1266 number comes from the bottom of its weekly profile. That price broke through last week. And at this stage here, it's been nothing more than a counter trend rally up into that trend line. We were looking at trend lines just with gold priced and 3 other currencies out there. Now, John from Sarasota also wanted us to take a look at ticker symbol SQ, which is square. So let's go look at the square one. Then we'll check to see if anybody else has any other requests out there. And, oh, I know what I want to show you, because we talked about, Don had talked about consolidations. Remember the Bitcoin chart that you and I were looking at, Bitcoin futures, and the consolidation pattern that we broke, that we had dialed in on? And what happens when you break a consolidation? All right, so we'll go back there in a minute. But first, with regard to what John wants to look at, which is Square. So John's looking for a good buy in Square. So if we take a look at the daily chart out here, can we say to John, hey, this is now a good buy? I don't know. First, John, what you'd have to at least see today is price close above 37.05. That is the bottom of its daily box. Would have said yesterday was a false move to the downside as price got below that level of support. Now, on trading day, the trading day of December 4th, 29 million shares, and yesterday was 25 million shares out here. So is Square a good buy? I don't see a pattern out here just yet. All we have are some swing points that are being tested. If I take a look at Square and we go see where Stevie's red line is, where is the counter trend rally, even if Square moves up to 39.80, it's just this sideways-ish type move out here, John, and it'd be tough for me without any kind of pattern, an A to B equals CD pattern, a Tom to Mark count, and anything out here. Coming back to a breakout level, I don't see a breakout area. So I say just keep your hands in your pockets. Now, if this closes above 39.80, it's got to contend with that downdraft, that gap to the downside. This is going to be your friend from being able to identify where there's going to be resistance out, and that's going to be your 47.40. So no matter what, when you do the risk-reward scenario, you've got to use as a target 47.40, or you should use as a target 47.40 out there, and you'll want to watch the volume as price is coming down there. On the weekly chart for Square, it says that a better buy is 32.54, and that's the bottom of its bullish structured box. It's just formed last week out here. We're trading below the center, so I would say either you go ahead and you take a momentum trade if it's okay with you above 39.80, know where your resistance is, 47.40, to see if that's worth your while, or wait till about 32.54, the bottom of that weekly profile. Now, don't just buy it blindly if it gets down to 32.54. We've got to come back and see what other patterns might be going on inside the daily chart, what's going on volume-wise, but that would be the levels. Those would be the levels that I would be paying attention to. Steve Rhodes with TFNN. We'll be right back. I'll work on this throat thing. I'll coat it with honey. Honey.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Back, folks. So, question in the den was whether or not I use anything like the confirmation signals that come from the IBD paper and digital system out there, and I forget the actual name. I think they have those confirmations after there's a huge increase in volume coming off a bottom. As an example, a follow-through day, right? I think that's what they call it, a follow-through day, and they say you've got to have these follow-through days. Excuse me. Sometime within day 5 or something like that. And I don't use that system at all. I haven't found that, I'm not saying it doesn't work, or I just don't use that system. To me, the better systems have been, and certainly because it's what I've traded and partially because of what I've developed, but more so because I know how much money it has actually made me. And that is continuing to pay attention to the stretch out here, the stretch to the upside and the stretch to the downside. And although this is the ES, that's not a good example because I don't have a pattern out here. But if we go take a look at the Dow again, and you see it on all the different time frames out here, when the Dow is moving higher, as it has. Look, here it was moving higher. When I say here, I'm looking at 9:30 yesterday, 10 o'clock. So you see that those lines get drawn on my screen, but they don't mean a thing if you ain't got that swing. And that swing is the cavalry arriving and giving you some type of bearish reversal signal out here. It went away. It got enough relative strength from the 11:30 a.m. time frame, and so that pattern goes away. This is an ultimate pattern out here. Why is this pattern so important? Because it is the one single pattern that you can hang your hat on, or whatever it is you want to hang your hat on, or hang anything on, that you can go back, and you go back into the, so far I've only been able to go back to 1865, I think it is, and take a look at the pattern that was present before every single, not most, every single bear market. Now, if it works like that, why would you? Because it's not in the stars, I promise you. The moon could be in Aquarius or in Virgo or wherever it wants to be. It's not present in the same spot before every bear market. The Jupiter aligning with Mars or wherever it is, it's not in the same spot for every bear market. I wish it was. I wish it was that easy. But it's not. It is that easy when we take a look at these patterns and the way they unfold, and then looking for different levels of support where price should pull back to, and when those levels get broken through, tells you you're going down to the next level out here. So this is what I utilize, what I share with you each and every day. There's a couple other tools, especially when bottoms form, that you and I have looked at out here. So that's really what it is that I use, what everybody overlooked. quite frankly, because I've spent thousands of hours trying to look. I think this is a fun business and a fun game. It's a fun way to make money out there, and because when you get your money to work harder for you than you do for it, knowing how hard you work for your money, that's a pretty cool thing. And so the question is, how are you going to find the tools or the patterns to assist you in doing that out there? And that's why I've just been so attracted to wanting to unlock that key out here. And what everybody has overlooked, you've got Steve Nissen that did a great job, 20 plus years ago, bringing the stuff that he learned in the textbooks out there from Japan, where these guys were using in the rice pits to buy and sell rice out there, using Japanese candlestick charting. That's what we look at. And that was basically his focus, was just on that. But if you try to use Japanese candlestick charting on its own, you're going to fail miserably, horribly. The candlestick signals are cool and interesting, but you have to tie them into the pattern side of it. And then you got the pattern traders out there that just simply ignore the Japanese candlesticks. So I just kind of shake my head and say, why? Why don't you marry the two together? Creates the most amazing marriage out there. You should do that with whatever the patterns it is that you trade. Whatever the pattern system it is that you trade, you should go ahead and combine those. Those candlestick chartings, those candlestick charts, those candlesticks themselves, they don't mean diddly. They're interesting. They're fun. We can tell a story. I can tell you about a three-river morning star and Oda Nobunaga. Sounds pretty cool, right? But the reality is Oda Nobunaga doesn't mean a whole hill of a lot of beans out there until you have the completion of some kind of pattern out there. Okay, enough about that. But I just went on because what my phone is doing out here. The new iPhone 10 is kind of getting a little fritzy here. So we do have a couple of questions that have come in. So let's just go to those questions. That makes a whole lot more sense. So Phil says, you have mentioned tomorrow as the day we reach trading day 11. I did, Phil. You're right. Good listening. And enter the strongest part of December for the year-end rally. Absolutely. That's what I did say. Tomorrow is also Triple Witching Day. That scares the bejesus out of me. According to Stock Traders Almanac, the S&P has been up 24 out of 35 recent years. Do you have any views on triple witching, either in general or in December? I don't. But the guy that does is Polar Bear, David White. I guarantee you, he's got a wealth of knowledge with regard to triple witching and what it might mean out there. So I'm going to save the answer to that question. I'm going to hand that off in the baton that we have here, because Basil handed the baton to me. I'm going to handle that baton to David. David, you're listening, right? So maybe you can answer that question for Phil, just to see if there's anything that you might have. I don't have anything there for you, Phil. Now, what Phil was referring to, if I can find a way to open up this this system out here. Give me a moment. Recent. He's referring to this specific slide right here. For those of you that don't know what Phil's talking about. Forget about the highlighted area that says today. We're in day 10 of this. Now, this is the average price movement. I'm going to switch these charts so I can go factor in all the prior years out there and just go ahead and change it to a percentage versus a price movement. But this is actual price movement since March 2009. Just to take a look at, and each month has basically 20 trading sessions. There are some months that have 22, and there are some months like February that has less than 20 trading sessions. It all depends on the way that the month is laid out. But on average, you're looking at 20 trading sessions. This December, current December that we're in, happens to be one of those months that has 20 trading sessions. And the point that Phil was making, point that I was making, is that if you take a look at from trading session day 11, that is tomorrow, the 15th, in which Phil is now telling you that the Traders Almanac says 25 out of 32 or whatever it's been out there, that has a positive bias. Well, that's just filling, we're taking a look at 6 of those years, right? So we got 2009 to 2016. So no, we're looking at what, 7 years out here worth of data. What we don't know, because of the average, is the average price, and that's just taking the average of the sum here, is, on some year that was a down year, can easily be offset by another cross year. In any event, the bottom line is that from tomorrow forward through December 27th, it's a very big positive bias. There's only anticipated to be only one more down day inside of the Dow after today. And that's on the 19th trading session of the year. But we're going to leave triple witching to our favorite polar bear, David White. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we've got a call. Not a call. We've got a somebody sent in, and I lost. I think it was Tim that sent in the request. He was wanted to take a look at ticker symbol XT. XT is an ETF for what is this for? This is for the iShares Exponential. Hey, anything with exponential in it sounds good to me. I just simply buy it blindfolded. But this is the exponential technology ETF out here. Now, the holdings, the top, 20 holdings that are inside this. And so certainly when you buy an ETF like this, you want to go take a look at certainly at least the top 10 holdings. Here you're looking at Alnylam Pharmaceuticals, Arista Networks, Tencent Holdings, Micron, ST Microelectronics, First Solar, Chugai Pharmaceuticals, NVIDIA, Wipro, Myriad Genetics, Tokyo Electronics, and so on. So those are what are inside it. But the question, I think it came from Tim. I apologize. It's off my phone right now. Is this a good time to buy? So let's go try to answer that question as best as we can. And when I take a look at XT, just simply on this chart right here, today price is below 35.25, Stevie's red line. You're getting down towards that zero level, interestingly enough. You're not there. But look, would suggest to me that price is going to pull back. So we take a look at this chart, just says that price should pull back. Now, if we go take a look at the daily time frame chart out here, we're going to see in order for this to pull back, it first has to get through support. Support is going to be 35.10. That's going to be the top of the daily box. If it is able to pull back below that level, then I would say your buy, so to speak, is going to be about 34.68. That is the bottom of the daily box, bullish profiled box out there. That should be support. If we look at if that level doesn't hold, though, then what you would expect is that price would pull back into the $34 area. And that is a possibility if price closes below 35.10 on a weekly basis. So we're looking at the daily chart, but you can also take a look at the weekly time frame. And I see the hook is out. They're pulling me off of the air. My throat's going to be very grateful for that. So thanks for sticking in for the hour, listening to this scratchy old dog here. But tomorrow I'll try to be a nice young pup. Steve Rhodes with TFNN. Stay tuned, folks. Your favorite polar bear is coming up next.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.